In today's video, we're going to be covering the most common mistakes made in Forex trading. So if you're sick of being unprofitable in these markets, make sure to watch this video all the way to the end and I'll show you exactly how you can fix it. Now going straight into it, a common mistake by traders, and I've made myself in the past, is a lack of a trading plan. Now having a lack of trading plan in the markets can really affect you negatively. So let's write some points down, okay? So we have our lack of trade plan. Right, we have our lack of trade plan here. Please excuse the handwriting, it's not very good. So what's our first issue having a lack of a trading plan? Inconsistency. Now why is inconsistency so important in the trading? It is obvious in the markets, but some people really don't pick it up. If you don't have a consistent trading plan, how do you expect to be profitable? You're trading every day in a different way. So there's the consistency in this, okay? You need a consistent trading plan, you need consistent risk management. This all ties up in your lack of trade plan, okay? If you don't have strict risk management that you're using every single day, nothing's consistent and you'll never have a real gauge of what your profitability or ratios or risk to reward or win rate is. You're not going to have any common statistics that you need to be a Forex trader. Now another point we have on our lack of trade plan is common error. What do I mean by common error? I mean that things can go wrong that shouldn't be going wrong, but you're not having a plan to make a systematic approach that you're not making these issues. Okay, so say for example, you're entering off the wrong confluence, you're ending off of random confluences, but if you had a strict trading plan, it would tell you not to do that. So this is why common errors are occurring in your trading journey, that you've not got everything written down, so you have a mechanical approach to the markets. You can't be having these common errors. You want it to come to a point in the market, so where you approach the markets like this. Okay, so what am I looking at? Okay, so what's the market trend? This is just an example. Okay, market trend. Right, let's say we're bullish, okay? What do we want to go from here? We want to find an entry, okay? So let's find our entry. We got our entry. What's our next system approach, okay? We want to place our risk management, okay? Right, please excuse the handwriting, that was a bit sloppy, but understand that if you don't have this systematic approach, you're going to miss things out. If you miss things out, you're going to make big mistakes, you're going to keep blowing accounts, you're going to keep taking losses, and you're not going to find a real edge in the markets. This is no good. Right, so let's wipe off this stuff now and go on to our next common issue. Now, one of our next issues is very common in the market, and it is over leveraging, okay? So what do I mean by over leveraging? I mean you're going greater and risking more than you should with your strategy. Now this ties up with a lot of things like greed or emotional. This ties up with a lot of things like greed or emotional trading. But our main thing is if we're over leveraging, we may take higher losses than we need to, again leading to inconsistency and blowing our accounts, which we don't want to do, okay? So we need a strict risk plan, okay? So this is how we can solve it. Risk plan. And what do I mean by risk plan, okay? This ties up exactly to a trade plan, right? So we have risk plan. And with our risk plan, we need to have a systematic approach that allows us to know instantly what we need to be entering and exiting in the markets, okay? And just by risk, this doesn't mean that, how much you're entering a position or your lot size. This means when you're taking out positions as well, because you are exposing yourself to the markets if you're letting positions run when they shouldn't be, or not letting positions run, or for example, adding into losses, okay? This is not the way we should be approaching it, okay? We need a systematic approach. For example, we have 1% risk, okay, per trade. Now, if we have this is quite common in the markets. A lot of people like to risk 1% because it's quite a fair amount. I personally, on challenges, risk 2%. Then when I go on the funded accounts, I go back down to 1%. On all my trades. So this is an exact approach that you guys could use to have a strict risk plan, okay? And what does having a risk plan means? You're not over leveraging, okay? So if you have this, for example, 1% risk, that's a fair amount. You know, I don't think people should really be risking more than 3% in a trade on a challenge or maybe a funded account. It depends on your own style, to be fair. I can't really tell you how to trade, but I think there comes a point where, you know, you're upwards of 3%, you are possibly gambling or one-side betting. etc., and you are over leveraging. Now, another common error made by traders is over trading. Now, what do I mean by over trading? It is very simple, entering more trades than you should be, okay? I say for myself, I trade about 2 to 3 positions max. I rarely do that, it's usually 1 position a day on my trading. But if you're going upwards of 5, 10 positions, maybe reevaluate and say, look, am I over trading? Now, with over trading, not only does this synchronize with lack of trade plan, it also links up with over leveraging. Because if you're putting yourself into the market more, you are increasing your likelihood of taking a risk. Now, I'm not saying don't take risks in the market, but it comes to a point where you need to protect yourself. If you've had a good day, maybe take a day off and say, look, I've made my profits for the day, I don't need any more, because that takes you straight back to greed and over leveraging and lack of trade plan. Now, instead of rewriting stuff for our over trading bit, I'm going to link this straight up to over leveraging and also link it up to lack of trade plan. If you're over trading some days and you're not over on the other days, that is again inconsistent, and there you have a lack of trading plan, and there you're over leveraging. Now, another issue that traders find in the market is ignoring news factors. Now, with news factors, this is very contextual. We have different types of news. We have economic news, we have global news. There's all sort of things that can affect your trading, but you do need to take these things into account when you're taking positions in the market. Okay, so if we write out here, now what can we do to fix this? Okay, my best opinion is have a look on Forex Factory. Now, when we're looking to fix this, what can we do? We have Forex Factory, which is our website where we can view all our economic events that are coming up in the maybe weeks or come into months. I normally look on the week and the day. And if we see that, oh, there's a high impact news event, maybe trade with caution. If we're looking at FOMC or CPI, etc., this can cause a large amount of volatility and lead to more unexpected losses. Now, another thing that can cause effects is geopolitical news. Sometimes this comes up on Forex Factory, but sometimes you need to keep an eye on, for example, your main news streams. So if you write here, geopolitical. Hold up, before we get back into the video, let me ask you this. Are you finally ready to master Forex trading? If you're tired of going in circles and want real results, I've got you covered. First, join my free Discord community, a space where traders like you share strategies, learn from each other, and stay on top of market opportunities. But if you want to fast track your progress, check out my one-to-one mentorship program. It's designed to give you tailored guidance so you can trade confidently and consistently in the Forex markets. So don't wait, if this is something you're interested in, make sure to click the links below. Now, thanks for your time, let's get back into the video. Now, moving on to our 5th point, we have unrealistic trading expectations. I see this happen so many times in the Forex market where people get very excited and that Forex is a get-rich-quick scheme, which is not the case because this skill takes years for people to learn, and it is most certainly not something that happens quick. So what can this do? This can affect you actually to overlook your trading plan, maybe not take account to it because you're wanting to make money quicker. So it is a bit of an emotional reaction that you can have with your trading, but also over leveraging, again, because you're trying to make more money to get these unrealistic gains that you see on your Forex traders' Instagrams, which isn't realistic, or it could be realistic, but it'll take a couple years to get there. And I'm not saying you can't do these things quickly, but we need to be realistic, okay? If it happens, great, that's amazing. You need to be realistic so you stick to a proper trading plan and execute properly. Now here we have our unrealistic expectations. Again, this links back to this stuff. I don't need to link that up because this is a bit more separate, but I do think this is a very important key factor in your trading. And you need to think, oh, am I overthinking things, you know? Am I rushing things? Am I jumping into the market too quickly, hoping for something that isn't there? You know, that is a big factor and you guys need to evaluate that. Now, another very simple thing, but traders actually don't think, is that they don't have the market knowledge. Okay, and this is okay, all right? There's so much information out there that you can use. You know, I offer my own mentorship service. We have a free Discord community. There's so much things actually out there for free. You go online, there's a free baby pips course, etc. It's all good information for when you're trying to start out. If you're going into something more in depth, maybe find a mentor, for example. But this is okay because this is all natural for traders. We all need to learn. Like, don't feel so afraid to learn or feel that you got to do everything yourself, because to be honest, your mentor has a mentor usually. It's a bit like trying to ride a bike, you know, you need a push to get started and then you can cycle off and go in your own lane. And, you know, it has to have a little bit of a push to get you somewhere, okay? So let's write this down. Hopefully we'll have enough room. So, lack. Okay, and with this also goes straight back to the trading plan, and straight back to over leveraging, straight back to news trading, straight back to over trading, and also unrealistic expectations, okay? Because people that actually know how to trade and know that actually how things work, you'll understand all these things. Now, the final point that is very, very, very important in the financial market is not keeping a journal. Now, with a journal, I don't mean you have to write and say a diary every day. I mean log in your trades. Now, with logging your trades, this means that you can collect data and analyze trends and patterns in your trading. So what do I mean by this? This means that you can track your risk reward, your win rates, your times of trading, your most profitable day, maybe your most profitable month, for example. And what does this do? I mean, this means you can implement it into your own trading. For example, I do the same. With my back testing, you don't have to do it with just back testing, but you can also do it with forward testing. I have quite a common denominator, which is that I have a 2.5 risk reward. I think that's correct. I'm not sure exactly, but I think it's quite common that 2.5 risk reward plays out quite highly. Now, what do I do with this? I trade with 2.5 risk rewards when I can, okay? If not higher, if not lower. But you know, you have that in the back of your mind and you can implement it. Now with this gives you a bit of faith in your own trading plan. If you're thinking that, oh, I'm having a bit of a losing streak, this may be a common pattern in your trading journey. Now with this, you could say, oh, I have a low risk reward. What do I need to do to make this a profitable strategy? So if you're trading unprofitably, you have these statistics that you can tweak to become profitable. So let's write this down. This is a very important point and I want you guys to all create a journal. There's loads of free Notion templates out there, a very important point, very easy to do. All you have to do is write simple statistics down, and then you can just work them out at maybe the end of the month or something, etc., or just review them. But even if it's just there, you're thinking about it without even realizing it, okay? So, but yeah, so no trading journal. Again, this means that you have no systematic approach to the market. Now, with having a trading journal, this can also help build your trading plan. Okay, so people are saying, oh, I don't know how to build my trading plan. Look at your statistics, okay? If you haven't tested something already, test it, right? Go on back testing, test a strategy. For example, support and resistance. Check that on back testing and see, okay, I have that in my trading journal now. I know the statistics of that strategy and I'll compare it into the live markets, okay? So if this works, then I can make it work in live markets. So yeah, so that will wrap us up for our last point here today. If you guys like these videos, make sure to like and subscribe. I'm sure there's also many points that I have missed, and if you do have any ideas, make sure to put it in the comment section below. Now I also want to say thank you for the views and likes that I received on my last video. It was very greatly appreciated and the video did extremely well and I was, you know, very happy with it. We managed to reach about 70 subscribers now, I think, and like 1.2k video views on that. So the more we grow, we can do better and bigger things. So I'm very excited to see where the channel can take us. And yeah, so guys, thank you for watching. Again, like and subscribe, and I'll see you guys in the next video. Bye.